Wait a second here. You're telling me that if the tax credit wasn't there, you wouldn't invest in wind farms. It's not to take a tangent. It's one of my beefs with all of these oil and gas companies that raise money by saying, but it's a tax deduction. It's like, wait. So I should invest in you just because it's a tax deduction? Is not because you actually are going to make me some money on the back. Wait a second here. So
I'm
it's
waiting.
the same
I'm
way.
waiting. Tax deduction versus tax credit. Big difference.
Well, no. Okay,
It takes
deduction credit.
financial profits to make a tax deduction, which is an investment, but a tax credit.
What's going on, everybody? Welcome into the Monday, April 21st, 2025 edition of the Daily Energy News Beat. Standup. Here are today's top headlines. First up, in the spirit of Shakespeare, to be or not to be, Russian LNG Revisited, sticking with the Russian theme. Here's how gas pipelines and seized Russian assets could give the U.S. lots of leverage over the EU. We'll flip it over to the United States. Clean energy projects in the United States have been lost in the wind to the tune of $8 billion. But how much cheaper will our electricity be? We'll stick with the U.S. U.S. conducts its deadliest-known recent strike on Houthi oil port. I've got some interesting thoughts on that. And then along the LNG theme, U.S. LNG exports rise to 34 cargoes. We will then jump over and I will quickly cover what happened in the oil and gas markets here on this 3-day Good Friday and Easter weekend. Check in on rig counts, some interesting moves from a rig count standpoint. And then finally, energy oil giant BP, seen as a prime takeover target, is a blockbuster mega merger in the cards. We will cover all that and a bag of chips. Happy Easter weekend to everybody listening. For everyone, as always, I'm Michael Tanner, joined by Stuart Turley. Where do you want to begin?
Let's start with our buddy over there, Cyrus Brooks, who I absolutely love as a thought leader. To be or not to be, Russian LNG Revisited. This is from an article, and he is over there with RBAC, and I've interviewed his dad and Cyrus, so he is a cool cat. Not just because he's been on the podcast a couple times, but because he is actually a industry thought leader, and his dad is also well. But despite the EU ambitions to phase out Russian fossil fuels by 2027, imports of Russian LNG surged to record levels in 2024, with Europe importing, Michael, are you ready? 17.8 million tons, a 9% increase over the previous year. Germany imports alone soared over 500% to 7.32 billion pounds or euros, excuse me. This uptick is partly due to the discounted Russian LNG prices. I'll tell you what, this is just amazing when you consider that they have such a anti-Russian LNG and anti-Russian natural gas. They're willing to pay a premium to go for Russian LNG in pretending to be mightier than thou. I don't know. The average price for gas in a pipeline, Russian gas, is $6. But when it's LNG, it's $15. That tells you the price difference.
That's something that's very interesting to note and to watch out for as you're studying these markets, is that price differential specifically that you pointed out. I mean, we all know China is going all in on Russian LNG because, I mean, quite frankly, now Russia, they got to be able to market their gas somehow.
Well, Russia has done an outstanding job, and the article in here, Cyrus does an outstanding job pointing this out, that Putin has moved his marketing to Asia. He's got his pipelines in there. He's now even had talks with North and South Korea, and the pipelines are there. There's about 40 miles left to do to connect Japan.
Well, and we know Japan is constantly an importer of all things, and they do a very good job of looking out for the Japanese people. Let's jump over here and talk about these seized Russian assets.
This one caught me by a little bit of a whoa. Can you imagine? This is from Andrew Koryobokov's newsletter on Substack. He's a PhD out of Russia. And Reuters reported earlier in the month that Trump's resource deal with Ukraine includes the Easter egg giving the International Development Finance Corporation control over its international gas pipelines between Russia and the EU. Holy smokes, Batman. Okay, when President Trump kind of surprised Secretary Chris Wright and said, Chris, do you think you could manage a Russian nuclear power plant in Ukraine? Sure, says Chris Wright. I did not have the United States being the intermediary between the Russian natural gas pipelines and the EU on my bingo card. This article really kind of lays it out that this could be a big deal in the peace process. But here's what Putin still has in mind, and President Trump still does not understand. Why would Putin want to help the EU? The EU has been bad for Russia. So this really is kind of really drawing down to the line. Secretary of State Rubio said, Michael, yesterday, we are only going to be in this for a few days, and we are either going to cut bait or we're going to have a deal. So they are not willing to say, this is big time news right now. And it's either going to be a deal or no deal. And they're not going to waste time because Secretary Rubio says we got a lot on the table and Ukraine war is not our war. Holy smokes.
Yeah. I mean, which is what we've been, I think people who voted for Trump have been asking for. It's really not our war. But you bring up a great point of what is going to happen with all of these assets. I mean, what's going to happen with Nord Stream? I mean, who knows what's going to happen? You know, I mean, do they rebuild it? Do the Ukrainian SEALs just come back in and take them out again?
And give them wrenches and so they can wrench the pipe back up. And the funny thing is, most people don't realize the only turbines that would work on the Gazprom are Canadian. Now, with the Canadians, there's 6 of them that are needed in order to turn on one pipeline. Oops. Absolutely. So let's go to the next story here. I had fun writing this one. This was a lot of fun. Clean energy projects in the United States have been lost in the wind to the tune of $8 billion. But Michael, how much cheaper will our electricity be if we didn't use them? And I have a number that is coming to mind. Let's go through some of these stats. Research suggests that 16 large-scale clean energy projects were canceled in early 2025 with about $7.9 billion. The exact number is yet kind of figuring out. One of those was Frere Battery, which canceled at $2.5 billion. And I liked that project, Michael, because Frere Battery was one of the few projects that actually the battery technology was allowed to be recycled. I understand subsidizing a little bit to get a new technology started if it helps the consumer and the environment. I'm disappointed this one is getting canceled. Bosch also canceled with a $200 million hydrogen fuel cell in South Carolina. That one I think is a smart move.
No, I do think it's a smart move. And you have been a fan of Frye Battery, not just because they came on the podcast.
No, I like the technology. I like recyclable battery technology. Right now, everything else is not there. And I want to go into some of the key points here. Warren Buffett said, Michael, in 2014 in an article from the Daily Caller, I will do anything. This is a quote from Warren Buffett. I will do anything that is basically covered by the law to reduce Berkshire tax rate, Buffett told on an audience in Omaha, Nebraska this weekend. For example, on wind energy, we get a tax credit if we build a lot of wind farms. That's the only reason to build them. They don't make sense without tax credit. This has gotten us almost shut down, Michael, for us talking about this.
No,
it's the powers that be did not like us talking like this.
It's true. And, we've seen Trump come out in the last month or two and basically whack offshore wind in New Jersey and New York. And guess what? Well, guess what people are, and he hasn't whacked offshore wind saying you can't develop offshore wind. What he's saying is there's no more tax credits to do this. And guess what people are doing? Oh, well, we can't build them anymore. It's like, whoa, wait a second. Wait a second here. You're telling me that if the tax credit wasn't there, you wouldn't invest in wind farms. It's not to take a tangent. It's one of my beefs with all of these oil and gas companies that raise money by saying, but it's a tax deduction. It's like, wait. So I should invest in you just because it's a tax deduction, is not because you actually are going to make me some money on the back. Wait a second here. So
I'm waiting. I'm waiting. Tax deduction versus tax credit. Big difference.
Well, no. Okay, deduction credit.
Financial profits to make a tax deduction, which is an investment, but a tax credit is theft.
Yeah, it works the same concept though. If okay, great, I'm going to spend $1 billion and I get to deduct 500 million from that. But if now all of a sudden the deduction goes away, I wouldn't build it. Why? Well, because there's no money in actually building it.
That's right. Now, this is going to bring up two huge issues coming around the corner. It takes about 350,000 to 925,000 or more per wind turbine, Michael, to take them down and try to get them recycled or put the blades in a boneyard. There are 75,633 wind turbines in varying sizes on the grid in the United States right now. That's a lot of money that is sitting there as a liability for all this land out here. I came up, and I'm going to throw a dart at this. And I've got a cost that if we did not have wind and solar on our grid, we would be having about 44% cheaper prices. And I got reasons for that number. So we're going to bookmark that number as we come in and write more numbers and write.
Yeah, absolutely. And I just want to say this. This is what, I tell everybody who asks me about different investments. If the investment metrics that somebody is telling you on a project that you're looking at, ask them, does it include or not include the tax benefits? Because if they're telling you the return includes the tax benefits, your next question needs to be, well, what is it without the tax benefits? And you'll either see it go significantly down, or if it still is within a range that you're interested in, then that's a good project to think about. But too many times these people use tax deductions to juice the returns, and when you strip them out, it's like, well, wait, this project's not going to make any money?
And when all of the wind folks were talked about land reclamation, they pulled a Scooby-Doo. Mm-hmm. They would not put land reclamation in there and said it's not worth it. So we got us a big problem. Let's go to the last story here on this. I mean, I got two more stories, but this next one, U.S. conducts its deadliest known recent strike on Houthi oil port. Michael, this is dramatic. We got an oil port that was hit. Well, guess how much? 49,000 barrels per day of crude oil, according to CIAC data. This is a sharp drop from early 2000s. So all this was cash flow for the Houthis. So this is not going to impact global markets. It's going to be about 4 more bombs less.
Yeah, I mean, here's the thing. If Trump gets us into a war in the Middle East, that will be the worst thing he can do. Yes, absolutely. Oil prices will go to the moon. Maybe they've got a good reason for it. It'll be terrible. And if that happens, we won't. On the verge of losing me. Quite frankly.
No, absolutely. I do not want a war. I want all wars stopped. In fact, we have about 64 B-1 bombers. They're not in the United States. They are all over the place deployed. It scares me to death. We have 6 B-2 bombers on Diego Garcia ready to strike, and if not doing some of these strikes. No, I do not want a war. I want that going on record. And I am not for war.
Yeah, no.
Let's go to the last one, or the last one here. The last story on a regular basis, Michael. I've been really tracking LNG as an export because, why it matters to investors and why it matters to our listeners is that President Trump is using energy export as a service, possibly even if we take a look at energy management of EU's Russian natural gas pipelines. Holy smokes. But if we also take a look at all shipments out of Cheniere Energy, out of the Marcellus, out of the Permian Basin, I track these. And this compares to this past week. We had 34 cargoes go out. The EIA said in its weekly report, shipping criteria provided by Bloomberg Finance, the total capacities is 129 BCF. This compares to 30 shipments of 113 BCF in the week ending April 19th. And I've been tracking the number of ships and the number of builds and the new kinds and everything else. And it turns out we are going to be buying LNG carriers because, Michael, we have one LNG carrier flagged under the United States right now.
And this just comes back to the Jones Act. We know it. So
stuff we're tracking.
All right, let's jump over here and touch on some finance stuff, guys. Before we do that, let's go ahead and pay the bills. As always, thank you for checking us out here on the world's greatest website, www.energynewsbeat.com. Stu and the team do a tremendous job making sure that website stays up to speed. Everything you need to know to be at the tip of the spear when it comes to the energy and the oil and gas business. Go ahead and hit that description below for all links to the timestamps, links to the articles. Subscribe to us on YouTube. Subscribe to us on Spotify and or Apple Podcasts. Go ahead and leave us a 5-star review or whatever review. If you think the show sucks, give us a 1-star and make sure to leave a comment.
Hey, if they're watching, they're leaving a review.
Yeah, especially if it's a solo show from Stu. He gets better views than I do on my solos, so we need to downrank his shows. So if you can help me out and boost me and kill his solos, that would be great. Also, subscribe to us on Substack, theenergynewsbeat.substack.com. A great place to support the show. We have a little paid subscription going there. Thank you to all of our subscribers there. They allow us to do what we do here. It's a great place to get some custom articles. Stu's in the, we're putting a lot more custom content there. So if you want to stay up to speed with everything that we're thinking in real time, check us out there and please sign up for a paid subscription. Also, shout out and thank you for supporting the show, Reese Energy Consulting, who's your oil, natural gas, LNG, and midstream company. Guys, if you're an upstream operator and you're not working with a marketing firm, I promise you are getting screwed out of cash from your first purchasers. You're leaving money on the table, not working with Reese Energy Consulting. If you're in the midstream space, they're all over. They do everything from helping you design LNG facilities to working you on bringing that life to plan, on buying and selling crude oil and jet fuel and LNG. If you need anybody, guys, call Reese Energy Consulting. We love them. Stu's doing a bunch of podcasts with Steve Reese. One actually just dropped on Friday with him and Mark Stansberry. So guys, check them out, reeseenergyconsulting.com via the description below. Tell them that Energy Newsbeat sent you and you will get a little bit of a discount, I'm sure, if you tell them that we sent them. And you can tell them that I said that. You tell them it's 75% discount if you say, no, it's a joke.
No.
Yeah, it's a 90% discount. No. But just tell them that Newsbeat sent you. We would much, much appreciate that. And finally, guys, if you are looking, everyone just got done with their 2024 taxes. If you owed the government money, now is the time to start thinking about how you don't do that in 2025. We just talked about tax deductions in the earlier one. So if you do want to become Billy Bob Thornton from Landman, you want to lower your tax burden. More importantly, you want to make a little bit of cash because that's the key. We're not just giving you a deduction. We're actually sending you a check. And you want to diversify your portfolio, get into the oil and gas market, show up to a party and be like, I actually own a few oil and gas wells. We have some great information and an oil and gas ebook we'd love to send you on kind of what investing in the oil and gas markets look like. And we have a great, great project that we would love to get you in contact with. So check us out. That's investinOil.energynewsbeat.com, or you can go ahead and hit the link in the description below to fill out the formula, and we will get you all the information. We appreciate everybody who has done that. Stu, let's jump over and dive into the markets here. Pretty interesting. Markets closed on Friday for Good Friday, so the last trading day we had was Thursday. Pretty quiet, though. Market, S&P 500 was only up 0.3 of a percentage point. NASDAQ was legitimately flat. 2 and 10-year yields jumped a little bit, 0.6 and 1.2 percentage points for the 2 and 10. Dollar index down about a tenth of a percentage point. Bitcoin down about half a percentage point over this 4-day weekend, $84,611. Crude oil on Thursday was up 2.5 percentage points, or $1.50, ending at 64.01. Brent oil was up to $68. Natural gas was fairly flat, $3.24, and our XOP, which is our EMP securities contract, was up 2.7 percentage points to 111.93. So pretty fascinating there. Mainly I think the reason you're seeing oil go up is twofold. You've got trade deal hopes. I mean, you could one could argue that the tariffs, at least from a trade imbalance standpoint, have led to some renegotiated some deals. Obviously, we are in a trade war, clearly, with China. But basically what we're seeing and what we saw Thursday was that the United States and EU began negotiating on a potential new trade deal, and the U.S. also went ahead and slapped on new Iranian oil exports. Basically basically what they did, which was these sanctions that were dropped last Wednesday by the Trump administration, basically said that you cannot export oil to China, and they specifically went in and targeted specific Chinese refineries known as the Chinese-based Teapot Oil Refinery. And this is in response and really, Stu, why they're doing this, and I'd love your opinion on this, really why they're going hard at Iranian oil is because they're in the midst of the Iranian nuclear deal. And I want to ask you a question. Are these all related? And if we see an Iranian nuclear deal, will that include some Iranian oil exports? How do you see those mixing? Because that's what's overhanging all of this geopolitical stuff, is the fact that Steve Witkoff and Secretary Rubio, they've been in Iran the past couple of days trying to work all this out.
Right. I think that they're worried about Iran. Iran has enough nuclear material to make 6 nuclear bombs if they already don't have one. And if they do, President Trump said to the press the other day, the U.S. would probably get one of those. So, it's a big, big deal. And that's why they're shutting him off again, or Iran off again, on the oil. I think that Iran will wake up and smell the don't get a nuclear weapon coffee here real quick. And I think it is a merger. I think what is not covered, Michael, in the news is that there is more. China has a shorter fuse for the tariffs than does the United States. We are China's biggest customer. And so China is got factories that are shut down. They have people protesting. There is money not being made. And now it has come out that the designer shoes that you paid for designer shoes are a $200 sneaker, or the Chinese factories are only making $8 a tennis shoe. And so that's a lot of money being made by the brand names that are not going to normal manufacturing. So I think China's on a shorter fuse than is Iran.
Yeah, and I do think it's going to be interesting to see what happens when this the deal nuclear happens. I assume something's going to happen. The question is it going to be something tangible? And is it going to include their ability to export a little bit of oil? Because if that is the case, then you're going to see a depression of oil prices. Because what you're seeing right now, the fact that prices have risen since the tariff massacre that happened 2 weeks ago, has a lot to do with the fact that the tariffs have decreased potential demand, and they've decreased supply at the same time by maximizing pressure theoretically on Iranian oil.
I'm going to disagree with just a little bit, and that is the dark fleet of about 1,300 different ships. There's about 1,300 that are possibly in that dark fleet. OPEC and OPEC Plus have lost control over the amount of oil being produced by their folks. So I think the sanction relief of that all it will do will be allow them to make more money legally, because whatever they can produce, they sell anyway.
Fair enough. So another interesting note, Stu, we'll go ahead and throw this chart up. Rig counts up 2. Interesting.
Nice.
Well, and what this counters, I think, a lot of what the people in the oil business were expecting, from the fact of, everyone keeps saying at $60 oil, nobody can drill. And so the real question is, why is there an increase in rig count? And I think there's a lot of interesting theories floating around. I think it's a little early to jump and say everyone's an idiot. Why are you drilling unprofitable wells? It's just 1 week. It's someone has a drilling rig contract that they need to get done. There's also the theory of really what's going to drop is, and what we really should be counting is the frac count spread, because drilling rigs actually at low oil prices, what happens? Drilling rigs drop their rates in order for companies to drill. And so the cheapest time to get pipe in the ground is actually when prices are down. You'll just duck the well. And then when prices come back, you'll then end up completing the well. So is it really rig counts we should be looking at, or is it really the frac count spread? There's a lot of really interesting stuff. I want to give it a few more weeks before we dive into some of that, but that's just something I'm watching. Let's do this. Cool. Last one here. Energy oil giant BP is seen as a prime takeover target, is a blockbuster merger in the cards. Last Thursday, we saw BP hold its kind of annual general meeting, which is the same thing as a shareholder meeting, but because they're based in the London Stock Exchange is what they call it. If you do not recall, they have a 5% activist investor in them. I forget the name of them. I think it's Elliott Management. Yes, it's Elliott Management, who has basically been pushing them in the last year to make significant business increases. And part of what that plan was in February, BP came out and said they're slashing their renewable spending and boosting its annual expenditures on its core oil and gas business. That's according to the CEO, Murray Anchor-Claus, who used to be their former CFO when their old CEO, who got caught fooling around with his assistant, got axed. And, it happens, it's unfortunate, but it happens. This kind of U-turn has basically really brought up, and this isn't a new rumor, but a lot more people are chirping now about two things. One, this article points out of a relisting in the United States. BP right now trades at a multiple relative to EBITDA that's less than its counterparties in its same peer group that would be listed on the U.S. stock exchange. Okay. And I think that's the interesting piece here. Their EBITDA multiple right now is about 4 to 5 times EBITDA, where they have portions of their business that could trade at 10 times EBITDA, which is specifically their marketing business, not the marketing business that we think of. They're not selling social media management. I'm talking about marketing oil products, which if you need help marketing your oil products, you should call up our friends over at Reese Energy Consulting. So when you're trading at 3 times or 4 times EBITDA, but there's parts of your business that could trade at 10, and overall your core business could trade at a slightly higher multiple if you were listed in the US, maybe that's something you consider. Well, then it brings up the second point of, should they just go ahead and merge with somebody? And we've all heard about the rumors of BP and Shell merging, and I think there's some legitimacy to that. I think you're going to have I think I would argue that that's more complicated than not, mainly because of the UK regulatory system. You think it's hard. You think the FTC is scrutinizing mergers in the United States, but they're scrutinizing them in the UK. And what's interesting is that the new head of the FTC, following up Lena Khan, is about as a stickler on mergers. I mean, you haven't seen an explosion of mergers right now because I think Trump is a little bit more populist than he is pure unbridled capitalist, from the standpoint of they are concerned about, too much consolidation in businesses. And so it could be the fact that they're seeing that, but also here's the rub. If they get listed in the United States, does that put a merger with Exxon or Chevron on the table? Ooh. What do you think about that, Stu?
I think a merger would be fine from BP to Chevron or Exxon. I think it would be fine from a non-compete kind of a thing. But from a UK energy perspective, it is a nail in the coffin for them. And their energy policies have absolutely decimated the oil and gas industry. And we're going to continue to see the decline of the UK and the EU under this kind of a policy.
Yeah, I mean, I think a merger makes sense because they have the ability to, especially if they merge with somebody who already has an offshore business, there's a lot of synergies there. I also do think it's an extremely complicated merger to make because for a variety of reasons,
Absolutely. But I'll tell you, the UK losing their entire oil manufacturing would be, they've done it to themselves. So not only did they shoot themselves in the foot, the splatter caught all the citizens.
Yeah, we will be bidding. Newsbeat will be bidding. I'm not going to quite say what our bid's going to be, but we will be bidding to merge with them. We'll see what happens.
I mean,
My favorite
BP's
part of
got some
the week, Stu, what should people be worried about upcoming? What should people be scared about? What's keeping you up at night?
nothing. I sleep very good at night. I know that I've been absolutely on target and on the map. So life is good. Things are getting better. China's in a lot worse shape than the United States. Buckle up. We are in for some serious entertainment and everything will be okay.
Yeah, absolutely, guys. Well, we appreciate you starting the week with us. We're going to have a great week. We're going to have a great month. And so we appreciate, again, all of our listeners, guys. But with that, we're going to let you get out of here. Start your week. Get back to work. For Stuart Turley, I'm Michael Tanner. We appreciate you guys checking us out. We will see you tomorrow.